Hi guys, it's your guy Anetori of Netto Hub, and I want to quickly show you guys how I caught a trade on 1 minute on gold using this structure you see here. So how did I go about it? First of all, identify a break of structure to probably the upside or the downside, but I'm going to use the up trend as an example right now. So a break of structure, make sure the low wasn't taken. Do you understand? Make sure the low wasn't taken. It's a rough sketch. Just take note of it. So make sure the low wasn't taken. So the next thing you need to identify is check out for the premium and the discount. And how do you know the premium? How do you know the discount? Take your Fibonacci. My Fibonacci is already set, so 50% of Fibonacci. So if I draw my 50% here now, right? If I draw the 50%, you see this particular trade, this particular chart is, if you check here now, is inside. This is the discount area, and this is the this is the premium area, and this is the discount. And you see the price moved from the discount, and if you check where it moved from, is from the 50%. Inside the 50%, it's still, if this particular one to this particular zone here, this discount, if you look at the middle, it moved from the middle of this particular 50%. So what I'm trying to say is that the price moved from here to here again is 50%. So let's say the price moved from here, right? Let's check it out. The price moved from there. Let's say your stop loss is supposed to be here. So your target is a little above, maybe 1:3, depending on you, or how the trend is at a particular time. So let's take this Fibonacci down to the place where it was. You see that it's around the 50%. It's inside the 50. It moved from inside the 50%. That's where the price moved from. Let me do it again, so you understand what I mean. Let's take this line and draw it here. So we used to identify where the 50% was. This is to identify where the 50% was, right? Then we're taking our Fibonacci down like this to the 50%. Are you seeing it? So this price moved from the 50% of the 50% of the discount zone. So what will you be expecting in this discount zone that you're looking at? In this discount zone that you're looking at here, what you'll be expecting in this discount zone is this particular diagram that is here, this particular one here. You watch out for your sweep of liquidity. This particular one is sweep. Then this one, your structural liquidity. This is a transactional liquidity, sorry. Here, like this, is transactional, it broke a transactional liquidity. Then after breaking, which will cause a break of structure to the upside, then it comes down with the structural liquidity, which gives you, a price movement down to that particular zone, and it takes it up from there. It boom. Then the next thing you need to really look at is, most of the time, this is a reclaim block. If you want to really look at it from this liquidity sweep, it's a reclaim block. So it broke, then price came to reclaim that particular other block that failed, then moved up. So whatever this structure as, just take note of it anytime you see it in the market. So if you see it on the discount zone, so just be rest assured that the price is going to move from there. So let me show you an example of how I caught a trade on 1 minute on gold this morning with this particular concept I just showed you now. So here, I already identified that one thing you still need to put in mind. I always tell my student is that once price start moving sideways, when I mean price start, that's a price alert that I set there. So just ignore. I'm expecting price to come there so it can go back up here. So once price start moving, you see the price already moving sideways. So once price start moving on the sides, it's moving sideways, just know it wants to change character. That's one thing you need to know. So I first of all identify as this price went up, right, as it came down, it was supposed to break this structure below, but the price did not break the structure. That's one thing I took note of. I told you must make sure the low is still intact. So price did not break that particular structure. So I was waiting. I saw price, come back to the zone. It didn't break it. Then it pulled back up. So I was like, okay, yeah, this price wants to take an opposite direction since it's moving to the left, to the right hand side. Sorry. So what I now did was I went to I took my Fibonacci. Sorry, took my Fibonacci from this zone. The price was already here, moving down, just the way this one is moving down now. So I took my Fibonacci here, and I marked out my premium and discount. So this was my premium. This particular zone, you already know the premium. This was my premium, and this was my discount. So what I did again was to mark out the 50% at that particular time. Marked out the 50% to identify, okay, this is where the 50%, so this is the premium side, so I shouldn't be looking for anything bearish in that particular zone. So then I took it down. Price moved from here initially. So anybody that took the price from here, you see the price actually came to take them out. It faked them in as if the price want to move. Then they took them out. Now it went up as they were planning or they were projecting to take the trade before now. So you can see this is where the price came. So all I did was just take my what's it called now? My long position here, put my stop loss below this low here, right? Then target 1 ratio. Okay. Target 1:3. This 5 minutes. So actually had a better position, a better risk to reward on the 1 minute, because I saw it on the 1 minute time frame. Yeah, so I knew the price was going to move from this breaker. Yeah, I already knew the price was going to move from this breaker because I traded breaker block so well too. So that's the benefit also of using confirmation entry. So my stop loss was around here. So this was the risk to reward I was able to bag using this particular concept I just showed you now. It's very easy. The concept is very easy, and the problem is you stick into it. Like you see the 50%, that's the 100% discount premium. Then it comes back to the 50%. Then where you're looking to take your trade is inside this 50% discount zone, and you see price just came in, tapping, and boom, gave you a sweet 1:5. So that's it. You can like and subscribe for more contents like this. I'll be dropping them. There are other ways you could have caught this trade. Also, you could have also caught this trade on trend line. I trade trend line most of the time, aside this. So you see, so the break of the trend line, you could have still gotten your position from the break of the trend line, but then you would have been waiting for a retest, and the retest would have been on this reclaim order block here. I'm waiting for the price to come reclaim this order block. That's why you see my alert is where it is. So I'm waiting for the price to come to this reclaimed order block so I can buy from there. So I can buy from there and anticipate a break to the upside. And where I'm actually looking at gold price right now, let's target the last high. See if I'm going to target the last high right now. So you see how much risk to reward we're going to have. That's the last high. So if you look at it, that's 1:33. So that's how you get a sniper. Imagine bagging 1:33 in just one trade. So that's how you get sniper entries on lower time frame. And I think this video has really given you a lot of insight. So a lot of insight. You can actually catch trades like this on other not just gold, other pairs. So this is just one I've showed you. So ciao, have a nice day.